earnings season kicking off on a positive note. Infosys delivering a steady Q1 performance in dollar terms. Revenues up 2% to $2.3 billion. In rupee terms, revenues down nearly 1%. So while net profit has slipped 3.5%, the drop was lower than what was widely expected by the street, which was almost 10%. And that, of course, brought immense comfort to industry watchers. Kritika Saxena traveled to the Infosys campus in Bangalore to get you the details.
Infosys was faced with several external and internal challenges during this period.
It's safe to say that FY14 has been an eventful year for Infosys. Some good, some bad. But the company has managed to start FY15 on a good note. Growth has been stable, helped along by a lower than expected fall in margins. The streets cheered as the company managed to stall the fall in margins at just 40 basis points instead of the 240 basis points decline most had feared. This because the company's cost optimization drive has successfully offset most of the hit from wage hikes announced over the quarter.
Our first quarter revenues were at $2.133 billion as against $2.092 last quarter, which is sequential growth of 2.22%. In constant currency, the growth was at 1.5%. We have seen our volumes increase sequentially by 2.9%, which is significantly higher compared to the last two quarters and gives us confidence for the subsequent quarters.
Speaking of margins, a 110 basis point benefit came in due to a change in the classification of assets as directed under the Companies Act. Volume growth has also been steady. In addition, the company has begun gaining some traction in its North American market and in the BFSI vertical, and this helped performance. But the big hit came on the attrition front. Infosys posted an all-time high attrition rate of 19.5%. And while the company says it is undertaking a number of measures to contain attrition, stability is still a few quarters away.
I think it will, our belief is it will show a declining trend over a period of time, but it will take a few quarters before it reaches where we want to be. Historically, our attrition has always been about 13 to 15%. That's where our comfort zone is.
That's not the only bit of sobering news. Infosys is seeing a marginal uptick in client spending, but says a complete revival in the company's growth momentum will take time, since the business is still vulnerable to changes. Also, while some green shoots are visible in North America after 2 quarters of decline, the European market remains under pressure, and so does its Indian operations.
I have also seen the announcement. These are very positive things, but it really depends on timeline, when this project will take off and so on. And realistically, most of these projects will be a long-term thing, right? 3 to 5 years kind of thing. So while some of this may take off over a period of time, I don't think overnight it will dramatically change. But it's good for India. I mean, if some of these things really take off in a big way, we'll be much more willing and much more happier to participate in many of these initiatives.
Pressures on pricing have also not eased much, and that's keeping the management on its toes.
Infosys has given a revenue growth guidance for FY15 of 7 to 9%. This is much lesser than NASSCOM's growth guidance of 13 to 15% for FY15. So, while it is a definite disappointment that the guidance is only 7 to 9%, Infosys has reiterated and maintained that they are confident that the 7 to 9% was fair and was based on the kind of traction that they were seeing in their business and their client, and hence it was fair to say that 7 to 9% is a guidance that they can achieve. Going forward now, all hopes that Vishal Sikka could possibly come in and create a larger uptick in overall revenues. In Bangalore, Kritika Saxena.
But it is a seminal moment for Infosys as it gets set to bid adieu to the last of its co-founders, CEO and Managing Director S.D. Shibulal. Vinita Athre takes a look at the man and his journey.
It has been a wonderful ride. That's the thought I have.
A 33-year-long entrepreneurial journey that began in 1981 comes to an end for the CEO and MD of Infosys, S.D. Shibulal, the last of the 7 co-founders, as he prepares to hand over the baton to Vishal Sikka on July 31st. And while over the last couple of years, Infosys has had a challenging time waging a tough battle against several legal and compliance issues, as well as the pressures of a sluggish global economy, Shibulal is a satisfied man and says that he is handing over to Sikka a company much stronger than it was when he inherited it.
I strongly believe that I'm leaving behind a stronger Infosys for all the reasons I said. And more importantly, if you look at it last year we crossed 50,000 crores in revenues. and we have 30,000 crores in cash in Infosys. I agree with you. I have said before, our performance in the last 2 years has not been to our own satisfaction, and we need to exceed our performance aspirations on a sustainable basis. I agree with you. So growth remains our topmost priority, and I firmly believe that that will remain Vishal's also topmost priority going forward.
Over the years, Shibulal has donned many hats at Infosys, including being its head of worldwide sales and customer delivery, the head of manufacturing and distribution, and the COO. But perhaps the one that he will be most remembered for would be developing the Infosys global delivery model, which set the industry standard for the delivery of IT services in India. But now, as he gets ready to leave this behind and move on, what's in store for the Infosys man?
There are already certain things in my life, like the foundations and things like that. So, and my daughter has a business, so there are multiple things. We'll have this chat after August.
After he took over from S. Gopalakrishnan in 2011, S.T. Shibulal has led the evolution of the company into Infosys 3.0. He has also been instrumental in sharpening its focus on products as a means to push services. Moves that clearly seem to be paying off very well now, even as he prepares to exit. In Bangalore, Vinita Atre.